The dividend yield of British American Tobacco is now at 10%. What happened? Why did the stock price drop? Are dividends safe? And finally, is the stock a buy right now? I will answer in this video. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash. We have more than 100,000 members and we try to profit from sustainable capital gains and growing dividends as well. Capital gains was not so successful in the last years with British American Tobacco and with other tobacco stocks as well. I will show you right now. Let's analyze the stock. So I made a small list. No, not this isn't it. Wait, that was my username. This is the list, and with this I show you all the famous tobacco stocks you can invest in. And we have British American Tobacco here. As you already know, dividend yield is at least close to 10%, 9.96%. Some hours ago it was still 10, but it's still on all-time high. And the question is, what happened? When I say what happened, I mean why did the stock price drop from 5th to 6th December? It dropped because management said they will make an impairment on their US tobacco brands, cigarette brands, of about 25 billion British pound or 31.5 billion US dollar. And now you need to know that it's not only a huge amount, but British American Tobacco makes the bulk of profits, more than half of all profits, with cigarettes in the United States. And if this business gets an impairment, it shows investors that things don't run as smoothly as they hoped. And so this explains the capital losses. Furthermore, management said that revenue growth will be just about 3% or closer to 3% than 5%, because management outlook was revenue growth between 3 and 5%. On the other hand, they also tried to find good news, and their good news was that the next generation products will reach profitability or at least break even this business year instead of next business year. Is this good news? Yes, this is very good news. Not really, because if you look at the segments, you see that British American Tobacco lags a little bit behind their competition, especially compared to Philip Morris, because their combustibles, cigarette smoking business still accounts for 83% of total revenue, and all the rest, vapor, traditional oral, and tobacco heating products account for just around 17%. We have growth rates there closely now as high as Philip Morris, but they start from a much lower base. And vapor, traditional oral, and tobacco heating products, in short, next generation products, so far they lost money. Especially, for example, tobacco heating products need to be pushed into the market to have a chance against IQOS, so that Glow has a chance against IQOS, the market leader. Vapor is doing fine, traditional oral also, except in the United States, where Philip Morris is also the primus. So, are dividends safe? The answer is in the quality check. And you can see here the adjusted earnings, and the reported earnings as well. Both cover dividends nicely, and we can also have a look at the free cash flow, also covering dividends nicely, also in the coming years, which represent the current opinion from analysts. So from this point of view, dividends look safe. What I should maybe say is that the impairments will continue. It's also important to note that we have here the balance sheet. The balance sheet of British American Tobacco consists mostly of intangible assets. which include, for example, brands which just experienced a write-off. This is a difference from Philip Morris. They don't have so much intangibles. You might not know, but British American Tobacco market capitalization is less than half of Philip Morris, but the balance sheet of British American Tobacco is more than double of Philip Morris. So just to give you this crazy relationship, and here we have a lot of potential for write-offs. Philip Morris has none, not like British American Tobacco. So don't expect news like this from Philip Morris, for example. We can also have a look about the safety of dividends. If we check the amortization power, which is basically free cash flow minus dividends. This is amortization power. This could be, you could use this money to pay off your debt, for example. And here you see we paid dividends, or British American Tobacco paid dividends last 4 quarters of 4.9 billion British pound. But free cash flow, fortunately, was much higher, with close to 8.5 billion British pounds, or 3.5 billion British pound still available after they paid dividends. This is the real cash flow. So, and you also see here, interesting, that from 2017 to 2018, the amortization power got a real boost. This is thanks to the acquisition of Reynolds. Reynolds was independent tobacco company, strong in the United States, and they sold the cigarettes. And so this was the acquisition in 2018 of today's cash cow for British American Tobacco. You can also see it here. If you have a look at the interest-bearing debt, you see that debt went up. Also, number of outstanding shares went up. This was how this acquisition was financed. You can also see that the goodwill went up, for example. But we don't dive so much in detail because we don't need this to conclude if dividends are safe. In my opinion, dividends are safer for the next business years. And then we will see what happens with the next generation products. So now we need to find out if the stock is a buy. Maybe it's already a buy for you if dividends are 10%. I would understand you. You can also see in the scorecard that with 9 out of 10 points, a dividend income strategy, British American Tobacco looks great. But let's check out the expected yield. If you invest in the stock, we make the fair value calculation using the adjusted earnings. And if we just use the adjusted earnings like this, calculated on the average of the last 10 years, which is the default option, we have a fair value of 46 British pound compared to 23 British pounds, or the double of the actual price, stock price, which is a little bit delusional. Here we have, because here with this decline in stock, we have an adjustment of the market, how they value tobacco stocks. It makes no sense to add these multiples to the fair value calculation. We need to make the fair value calculation based on this time frame. And when we do so, we see that the multiples went down. Before they were 12, now they are about 8. But the current multiple is 6 only. Fair value would right now be close to 30 British pound, where the stock was last time this year in spring, mid-March. What yield to expect? If you think that if the stock price does not recover and just continues like this with 23 British pounds, then you have an expected annual yield of 10%, which comes exclusively from dividends. And if you think that the stock price goes up just a little, of course, capital gains add to your expected yield. If the stock price just recovers for even not £2, you already have an expected yield of close to 12%. If the stock price recovers to, let's say, £26, you already have an expected yield of 30.3%. And now, in my point of view, you see that if you say that dividends are safe, that 10% dividend yield, and if you have an investment strategy which represents dividend income strategy, then I completely understand you if the stock is a buy for you right now. If dividends are not everything for you, or if you like high dividends, but extremely high dividends are not necessary for you, then you could also have a look at Philip Morris. Philip Morris does better right now, is in my point of view the market leader of the transition in the tobacco industry, and might also be very interesting. Little disclosure, I own both stocks, but I'm more heavily invested into Philip Morris. Okay, so dividends are high, dividends are safe. You now know why the stock price dropped. You have an idea about the yield, about your yield to expect if you invest in the stock. I think that's all, no? But maybe you have another opinion or forgot something, then just drop me a comment below. I'm happy to read and to answer. See you next video. Bye bye.